How to write off your home expenses to pay less taxes. We are talking about writing off things like your rent, your mortgage interest, property taxes, homeowners or renters insurance, or how about your utilities like your electricity, water, gas, and Wi-Fi expenses, and even home repairs or house renovations. Yes, you can write off a significant portion of these expenses with the home office deduction. But sadly, millions of taxpayers are leaving money on the table every single year because they fail to take this deduction or they get it completely wrong. Oh, and by the way, if you're trusting your accountant to do this for you correctly, then I've got news for you. A lot of accountants do not fully understand this deduction either. I see this all the time. Most of the time, they are either one, not taking the deduction at all, or two, not taking the maximum deduction that you can take. There is so much misinformation about this deduction. Some people even believe this is illegal, but it's quite literally in the tax code. And don't get me wrong, some people use this deduction, but they miss so many eligible expenses that they still end up paying way more in taxes than they actually have to. And everyone else, well, they probably don't even know this strategy exists.
You won't ever hear me say this again, so savor this moment.
Which is unfortunate because this is a tax strategy that does not cost you any money out of your pocket at all. You can take something that you literally already pay for and write it off from your taxes if you fully understand this concept. So look, today I'm going to give you the simplest and easiest to understand breakdown of the home office deduction and how you can use it to save thousands in taxes. My name is Sherman the CPA, and I have saved business owners millions of dollars in taxes by using tax strategies just like this one at mycpacoach.com. And today you're going to learn this one for free, so be sure to save this video and pay close attention here. All right, so let's break this all the way down. What is the home office deduction? The home office deduction allows self-employed individuals to deduct a portion of their home expenses. The idea here is simple. If you use a portion of your home for your business, then you should be able to deduct a portion of your home expenses as a business expense. It doesn't matter if you rent or own your personal residence. If you use any portion of your residence for your business, your expenses may qualify for this deduction. So let's go ahead and talk about how you can qualify. First, you must own a business or earn 1099 income. You cannot use this deduction as a W-2 employee, but you may be able to still take this deduction through a side gig or business if you are one. And secondly, you must use a portion of your home regularly and exclusively for your business. Exclusive use means that the business portion of your home is not used for personal use. For example, if you work on your dining table in your kitchen, but you also use that space to eat and spend time with your family, that portion of your home would not be considered for this deduction. On the other hand, if you have a room in your home that you use to work on your business, like an office space, then this space may be considered for this deduction. Typical use cases for the home office deduction is using a portion of your home as an office space, meeting space, or storage space for your business. And you can also take this deduction if you rent out a portion of your home to another individual. So this sounds simple, right? Well, I'll tell you why so many people get this wrong later in the video here. But first, let's talk about how this write-off works and how it can reduce your taxes. Let's start by taking a look at this table on the IRS's website regarding the type of expenses you can deduct. They specifically state that direct business expenses are deductible in full, or in other words, you can deduct 100% of the expenses that are only related to your business. For example, if you bought a computer or desk for your home office, you could deduct 100% of this expense, which makes sense because it's 100% related to your business. Then the IRS says that indirect home expenses are deducted based on the business portion of your home. They go on to define indirect expenses as expenses for keeping up and running your entire home. So basically, you can deduct a portion of your rent expenses or mortgage interest, real estate taxes, utilities, insurance, repairs and maintenance, depreciation, and so on. But you can only deduct a portion of these expenses, specifically the portion that represents the business use of your home. And to figure this out, all you have to do is find the square footage of your home that is exclusively and regularly used for your business. By the way, the more home space your business uses, the larger your deduction will be. So be sure to include all applicable space for this deduction. Then divide that number by the total square footage of your home. The end result will represent the portion of your home that is being used exclusively for your business. Then you would just multiply this number by all of your indirect home expenses to figure out your home office deduction. For example, if you have $100,000 in indirect home expenses and 20% of your home is being used for your business, then you would be able to write off $20,000 of those home expenses, which would save you about $7,500 in federal taxes alone if you are in a 37% tax bracket. Indirect home expenses are typically the largest home expense category for most taxpayers, which is good because the IRS allows you to write off a good chunk of these expenses from your taxes. But while that's great, there is a category of home expenses that the IRS does not allow you to deduct. And they define this as unrelated expenses. The IRS defines unrelated expenses are expenses that cover only part of your home, in which case would not even be indirectly related to your business. Remember, indirect home expenses are expenses that relate to your entire home, which your business occupies. But any expense that does not relate to the entire home should not be deducted. For example, if you buy furniture for your living room and you do not use your living room for your business, no portion of that expense should be deducted with the home office deduction. Or if you decide to renovate your kitchen and you don't use your kitchen for your business, those expenses would not be eligible for this deduction. Only direct and indirect home expenses can be used, so be sure to keep this in mind. All right, so if you can save thousands in taxes with the home office deduction alone, then why do so many taxpayers get this completely wrong? Let's go ahead and talk about the mistakes that will ruin this deduction for you and result in higher taxes. Mistake number one, choosing the wrong method. So many taxpayers and accountants use the wrong method when calculating the home office deduction. And by wrong, I mean they choose a method that does not save you the most amount of money in taxes. So the IRS gives you two methods to calculate your home office deduction: the simplified method and the actual expense method. And look, whenever the IRS gives you two ways to calculate one thing, you better believe one of those ways are going to save you more in taxes than the other.
Who says you gotta choose? I do. I say so.
The method I used earlier to illustrate the home office deduction is the actual expense method. This is the method that typically saves my clients the most amount of money in taxes in my experience. And it's because of two things. One, it uses your actual home expenses, and two, and more importantly, it is not limited. The simplified method, on the other hand, does not use your actual home expenses and is limited. So the simplified method gives you a measly $5 per square foot of business space in your home, which you can deduct. And to make matters even worse, it is limited to 300 square feet, which means the maximum home office deduction with the simplified method is $1,500. So make sure that whoever files your taxes uses the method of deduction that will save you the most amount of money in taxes. But that's not all you need to worry about. Let's talk about the next one. Mistake two, missing deductible expenses. If you do not include all of your eligible home expenses with this deduction, you will fail to maximize the tax benefits of it. So many people only include their mortgage interest or their rent expense, but fail to deduct other expenses they pay for and incur, like their insurance, property tax, utilities, Wi-Fi, and so on. And a lot of the time, it's not even their fault, it's their accountant. If your accountant does not ask you for all of your home expenses, then they probably are not maximizing your deduction. But in order for even a good accountant to maximize this deduction, you also need to be organized with that information. You should have a good record-keeping system that keeps up with your home expenses so that you can easily provide them to your accountant to maximize this deduction on your behalf. Missed expenses are missed opportunities to reduce your taxes. But there is one expense that even the best record-keeping system will not track, and some accountants will still miss, and that is depreciation. Mistake number 3, not taking depreciation. With the actual expense method, you are able to include depreciation expense as part of your deduction if you own your home. Now, I love depreciation because depreciation does not cost you any money out of your pocket, but can still be used as a tax deduction on your return. So what exactly is depreciation then? Because real estate loses value over time, the IRS allows you to deduct the cost of your property over time. For example, most residential properties have a useful life of 27.5 years according to the IRS. So to find your depreciation deduction, all you would have to do is take the purchase price of your home and divide it by its useful life. For example, if you bought a $300,000 home, you could include about $11,000 of depreciation expense in your home office deduction calculation. So if you're looking to maximize your home office deduction, you should ask your accountant about including depreciation expense as a part of that write-off. Now, depreciation is a very deep topic, as there are ways to accelerate the rate of depreciation you take, and there's also some potential tax pitfalls that you need to be aware of related to when you sell your property. To learn all about that and even more ways to reduce your taxes, be sure to subscribe to our channel. And if you need immediate assistance to reduce your taxes, like right now, then contact us today at mycpacoach.com.